Ladies and gentlemen, okay, let's rock this thing. We're live right now, so I can see comments coming in. If you happen to catch a replay of this later, awesome, cool, that's fine, but you can still drop comments, and I will be sure to get them answered for you. Today's session is all on multifamily. It's all on how you can go and grab deals right now and build wealth through them without burning a big hole in your checking account, okay? What I learned in this business is that, I'll just tell you right up, okay? We closed on a property roughly 4 weeks ago. Beautiful 38-unit building in Lexington, Kentucky. Great little property. And it reminded me of my first apartment project about a decade ago. That first apartment project a decade ago, we were able to get for somewhere around just shy of $500,000. And on the exit, on the back end, it sold for closer to $2 million. And I had all these reflections going back through my head again when we closed on this new property, this new 38-unit building of my first property. It's like, okay, yeah, this is the mechanics. This is how it goes. And I was really feeling like dialed up, inspired to share this with you so that you can go out and you can do this, because right now there hasn't been a better climate to actually get funds for these deals that I've seen in my lifetime, literally. When I first started in this business 15, almost 16 years ago, the lending climate, the investor climate, it was a little bit different. And then especially when the 2008 through 2012 drop happened, the investor climate completely and radically changed. Now it's 180 degrees different. There's tons of people that want to get in on the action. There's tons of money floating around. So what are we going to cover today? 3 big things, okay? How to find properties, how to fund them without burning your checking account. Does this business take some money? Certainly does, mostly on the marketing end. And then you have to have enough money for you to like physically be able to get around and do the real estate side of the business that you should be doing if you're going to be someone that's going to be the operator for the property, someone that's actually in charge of the property. So certainly does take some funds, but it doesn't mean to close on a 38-unit building. It doesn't mean that you have to have $3 million. It doesn't mean that you have to have $1 million. It doesn't even mean that you have to have $500,000. You can do this with partners that want to get in on the action. You can do this with private investors that want to actually work on projects like this and invest their money. And I got to meet with last night a very blessed opportunity who was someone that I spoke with 2 years ago. And what this man has done in 2 years, literally in 2 years, in the last 8 years total, 2 years like literally being the cherry on the top that just catapulted him to the top. It literally was over $100 million in real estate deals. $100 million. You can't do $100 million in real estate deals doing single family houses, house after house. You just can't do it. It's not physically possible. Trust me, I've tried. When we pushed Home Invest to get to the point where God blessed us with Home Invest, don't get me wrong, we got to do $40 million in a few short years. That's like, we were hustling. I remember one month we closed 61 single family houses in a single month. That's insane, the amount of the stuff that we were doing. So to get to $100 million, you can't do it with single family in a short window of time. You can't do it with single family. You got to move over into the multifamily space. And that's what this man did. And last night he was going through some things with me that really hit me. And I hope I get a chance. I hope he actually is watching this maybe, but this is a message that I'll never forget. And I'm going to do it for you right now. I'm going to go ahead and I'm going to light this candle on fire, okay? And I want this to be a visual representation for you. Picture this candle as being your life. We all have a certain amount of time that we're here. This candle will burn for a certain amount of time. Maybe it will burn out even while we're together. I'm not sure. Let's go ahead and find out. I just lit this candle, okay? And we're going to let this thing go during the broadcast. I'm going to put out the matchstick so I don't burn myself with it. But we're going to let this thing go during the broadcast here. And during our time together, we'll check back in on this. But I just want this to be a representation of the amount of time that you have. Okay. He told me last night, because I was asking like, wow, I joked around with him a little bit. I'm like, you've been bored, huh? And he's like, yeah. And I'm like, well, what's the motivation? What's the drive? What's the push for all this? And then he told me, he said, Nate, our life is like a burning candle. And I've already burned through 3/4 of mine. I only have a little bit left here on this planet for me to make the impact that I want to make. Holy cow. So that's the secret to doing $100 million worth of real estate deals in a really short window of time. Knowing that our time is limited. Knowing that we don't have infinite amount of time to get to this destination, okay? So you and I, We got to go. We got to get our butt in gear and go. I have never seen a better climate in my entire life than right now for being able to amass a lot of capital to do real estate deals. It just hasn't happened before. Why? Well, number one, a lot of investors are afraid to leave their money in cash because inflation's running rampant. Number two, inflation's at a 40-year high right now. We haven't seen inflation like this in 40 years, and it's only going to get worse before it gets better. I mark my words on that. It's not going to get better overnight. When I heard the president blaming Putin for inflation, I agree gas price has gone up because of Putin, but inflation overall is not, it didn't go up because of Putin. Inflation was happening before Putin went and started doing the things that he's doing right now, the terrible atrocities that he's doing. Anyways, so inflation is running rampant right now, and it's not going to stop for a while. We printed a ton of money. That money's in circulation. Every time that the government, and it's not just this administration or the last administration, it happens every time that a government gets into some big crisis, they tend to print money instead of just dealing with the crisis. Well, they deal with it through printing money. And anyways, that has an effect. So right now, money is looking for homes, and it's going into real estate right now. It's going into gold, stocks, all that kind of stuff. The safe spot for investors to park capital is traditionally real estate, gold, bonds, other hard assets, preferably for them. I shouldn't put bonds in that category, but it's considered a relatively safe investment for most. So anyways, we're seeing prices lift, and they're going to continue to lift, okay? So how do you find a property in this climate? That's the hardest part, because most of us, we get it. We're like, yeah, okay, I get that I can raise money easy, and I'm going to show you how we do that. I'll give you access to what we do to do that during our time together tonight. But how do you find the property? That's the bigger question, okay? We got this deal going on right now, and I'm actually just going to share the address. So it's 820 Albee in Nokomis, okay? You can look at this up. This one's not like a big secret or anything like this, and this one actually got listed, which is pretty cool. Got listed. I went and looked at it yesterday, mostly to because it kind of fits the criteria that we're going to do while we're here together, okay? But this 820 Albee in Nokomis, this particular property, it's a building. It's got an upstairs and a downstairs, and there's 5 units per floor. Let me make sure I draw this right. 1, 2, 3, 4. 1, 2, 3, 4. Oh, I got to get one more in here. Boom. 1, 2, 3, 4, 5. There we go. So there's up, there's down. Down here is commercial space. They got a bait shop right here. Bait shop. They're consuming 2 of these. They've got a dog grooming place here. Dog groomer, and then these 2 are vacant, and then upstairs is residential. But all of these and these down here, they need work. This just basically an empty shell right now, okay? So that's where the upside is for us. The seller on this one, right now, they want $2.1, maybe a little bit more, $1 million for the purchase, okay? I'm going to show you how this all comes together, okay? How we find deals, not this deal, because this deal is an easy one because it was listed. How we find a deal like this, if it's listed, you actually just call the brokers and whatever, and you get with them. But how you find the off-market deals right now is you actually do marketing. You run ads to bring deals like this to you. And right now, because there was this period for 2 years where basically banks did not have to disclose bad loans. They didn't have to disclose it. It was part of the CARES Act when the Trump administration passed this legislation to get through. Part of what slipped in there is that banks don't have to report bad loans on their books. And what's happened is that the commercial sector of real estate took a pretty big hit during the pandemic, and a lot of those businesses still have not recovered yet. And so the banks were able to put Band-Aids on some of the bad news on the reports. But the bad news reports have to come out in roughly 2 weeks, for the first time in 2 years. And when they come out, it forces the bank to make moves. If a bank has too many bad loans on their books, then what consequently happens is that the bank, like if it gets way in the red, if you remember 2008, 2009, 2010, do you remember how many banks literally, like it seems like they changed their names overnight? Remember, even like Lehman Brothers went under. Lehman Brothers is one of the oldest institutions in America, and they had to change hands or change a majority ownership stake. What happens with banks that are regulated by the FDIC is if they get too in the red with bad loans, they're forced to sell. They're forced to sell to a healthier or stronger bank. There's nothing, no 2 cents about it. Like, that just happened. It's a mandate. And so now for the last 2 years, banks did not have to report on this. Now, April 1st, 2022, unless it gets extended that they don't have to, they have to. And so there's going to be, I don't know if I should call it a bloodbath. I don't really like that word, but there's going to be a lot of banks that are starting to push the bad loans off their books faster now. There has to be. I spoke with a very prominent bankruptcy attorney in a city that I do a lot of business in, and he told me that right now, bankers, that a lot of his clients are bankers that are like going through foreclosure, and they want to prevent bankruptcies and all that kind of stuff, so they hire him as a consultant. A lot of those bankers are standing with knives behind their backs right now, waiting for the moment that they can cut the bad asset loose. Okay, so how you find these is you run ads to those people, plain and simple. I'm not going to get into that right now because that's really techie on like how to run an ad to a distressed seller. I can't do that right here, but that's how you do it. Okay, I'll tell you how. Like, I'll give you the overview on it before we end this tonight, but that's that part of it. This particular property was pretty easy though, but I'm going to use it for illustration purposes because I'm actually looking at it very closely too. Okay, so residential units upstairs, downstairs, it's all filled with commercial, or it will be filled with commercial. So it's called a mixed use building. Not my favorite at all. Sometimes jokingly in the commercial space, people will call this a mixed bag. I had one of these buildings years ago, and it never hit the pro forma numbers that we thought it would, because what happens is that the residential folks, they don't really like living in a commercial district. It's just never really home, so there's more turnover. And so your costs are a little bit higher and all that kind of stuff. This could work, however, if these residential ones were more like short-term rentals. Short-term, like people in and out, coming to the beach, and this property is within 2.5, maybe 3 miles of the beach. So that might work for it. So that's kind of how I'm underwriting my analysis on this. Okay, 2.1 purchase. It's going to need roughly about 0.6 million, aka $600,000 in renovations. I'm going to call that rehab money. Okay. Then we're also going to have roughly another 0.1 in carry costs, closing costs, all that kind of stuff. Another $100,000 to get through the project. Because remember, you got taxes, insurance, all that kind of stuff. So this is, like, I told you how to find them. Now let's move on to how do you fund them. If you got a project like this, you're all into it, 0.1, 0.7, 0.8. You're into this thing for 2.8. I'm doing very, very loose numbers for you so that for just this illustration, but we're into it for $2.8 million, okay? Okay, great, fantastic. How do I come up with this? Well, number one, we have to be darn sure that this property is worth a lot more than 2.8 if we're gonna even get our fingers into this thing. There's no way I'm gonna drag myself through a thick rehab and all that kind of stuff and end up in a position where I'm not having equity in the property. I just wouldn't do it. Sometimes I'll buy strong cash flow properties at market value full on if they're cash flowing really strong, because I can do value add with increasing the rents. But if I'm going to get into a rehab project like this, then I want to make sure that I've got more equity in the property on the back end. So this particular property, when I go through and I analyze all of these rents, the residential units and the commercial units, I can get roughly $2,200 per unit times 10 units. Okay. So this is pretty good. It's pretty good in monthly rent. I'll actually go through the math with you just to make this like very illustration oriented. But if I pull up the math, obviously 2,200, add a zero to it, we're getting 22,000 per month on this. AKA, if I go times 12, we're getting about $264,000 annually. See that? So 264 annually, okay? Now, typically with spaces like this is a really quick down and dirty rule of thumb, but if you knock out about half of this, it'll go towards expenses, taxes, insurance, all that kind of stuff. So I'm gonna go ahead and do that. 0.5, I bring it down to 132. NOI, which stands for net operating income, $132,000 annually. NUL, okay? That's not bad. This is a pretty attractive property so far, okay? If I start to reverse into the value of this building, the way that this is done, it's very different than residential. Residential, if you're going to figure out the after repair value, the ARV, you would do it based on comparable sales. You would do comps. A realtor would do it on residential properties. On commercial, the comps are done quite differently. The comps are done based on net operating income. What is this place bringing in? How much can it produce? In the commercial world, they call it a cap rate, okay? The current area for properties like this, the cap rates are selling somewhere around a 5% cap rate, okay? If I do the math and I reverse engineer this, I won't get into the ninja tricks behind this. There's tons of calculators online to figure out cap rates, so you can do that really, really fast. But if I reverse engineer this on this particular property, it's worth somewhere about $3.5 million or more, potentially more, okay? And actually, I did it at a 6 cap when I did the math on this yesterday, but it's worth 3.5 million plus. So what I do to fund this thing is this. I package this property up. I make it look really, really pretty. I can't do a share screen right now, otherwise I would, but I basically put it into a very nice web page, and then I get it out to investors. Okay. I get it out to investors to help me fund it. Okay. So we call this process here internally, we call this SLP, which stands for select the property, which we already talked about. Then we get leverage, then we get partners. Okay. So the way that I do this is this: we select the property, found this one. Okay. And then we go out and we find leverage, and then we find partners. Well, this L right here, this leverage, this is a bank, some kind of traditional bank that does loans on commercial property. Okay. There's tons of them out there. There's even a lot of lenders in the commercial world that will do non-recourse lending, which simply means you don't have to sign a personal guarantee. You don't have to vouch your firstborn child to get the loan for the property. Okay, that's my preference. But we go out, we find leverage, we find a bank that's pretty easy to do, self-explanatory. And then the one that people get the most hung up on is finding partners. So I'm going to spend a little bit of time on this, okay? Finding partners in this environment right now is the easiest part of the equation, in my opinion, if you've got marketing going, okay? So we found a good off-market deal. We analyzed the numbers. We got them all here. It looks good. We put it into a nice format. We got a bank to say yes to it. So a bank already looked at it and said, hey, I would do that deal. But the bank is not going to fund this thing 100%. They're going to say, hey, you got to have some equity in this deal. Okay. So how much equity are they going to require? Well, some banks will do loans off of the after repair value. Some banks are going to do it off of the purchase price. Some banks are going to do a combination of the two. And that's more than likely what's going to happen for most of you, okay? So in this particular case, what the bank is willing to do that I can get right off the bat, so 2.8, boom, boom, boom. Oh, that's 28 million. I want to go to 2.8 million times 0.2. They're willing to loan the majority of the 2.8, but they're requiring that we bring $560,000 of this money to the table. $560,000, 20%. Okay. So on something like this, 560 on a $2.8 million project, that's not that bad. I'm going to budget a little bit more because of like carrying costs and any kind of surprises, any kind of legal work. In case the contractor comes back and says, hey, it's going to cost more, I want to budget more. When I go to my investors, I want to go to them upfront once, fully prepared, and never have to come back and bother them again. That's the worst thing that you can do. Like it happened to me on one of my first syndication projects where I had to go back to investors, ask for more. It was terrible. I don't want to ever do that again. I was honest, and it ended up the funding came through for it and all that kind of stuff. But like I want to be prepared in advance. Okay, so that's a lesson for you. Just be prepared in advance, and your investors will love you if you just over deliver. So I'm not just going to ask for 560 on this one. What I'm going to do when I go to investors is I'm going to ask for somewhere around $800,000. Okay. If for some reason I don't need all of this capital, I can always return it to the investors. There is no harm whatsoever. If you return it early and you pay them some good return on their investments, they're going to be happy as a clam. Okay. So when I take this $800,000 proposal to my investors, basically what I do is I offer them a part of the deal. Okay. So what I do is physically is I run ads. I own a company called Social Media Blueprint. Some of you guys have seen it, and that's probably why a lot of you guys are here. I use Social Media Blueprint to bring in off-market deals to me, and I use Social Media Blueprint to bring these kinds of investors to me. I specifically go after, for this batch right here, accredited investors. That simply means that per the government standards, they make enough money per year or they have enough assets already that they can take investment risk like this. They're capable of it. And the government says that anyone that's not accredited, there's no like formal accreditation office or anything like that. It just simply means that they make $300,000 per year as a household for the last couple of years, or they've got $1 million in net worth outside of their personal house. And so if they meet that box, there's no like special department to give them a validation or accreditation. It's just that they're accredited. Okay. They sign a piece of paper saying they're accredited. Their attorney signs a piece of paper validating it for them, and then they're in. They can do a deal like this. So I run ads to get people like that to come to me. Once they're in my world, then I do the same thing, the same process that we do with you or with your sellers. You build rapport. You build relationships. No different than right now. Like I'm here, like I'm teaching you. I'm spending my time. I could be hanging with my 2 little boys who love this time of day to go outside on their bicycles. I could go do that, but I'm choosing to come and like just serve the community 100%. And so you do the same thing with sellers. You do the same thing with investors. You just show up, you serve, you give to them, you teach them. And then what happens is there's going to be a percentage of them that say, hey, I really appreciate that. I'd like to explore more. Or, hey, I'd like to learn how you might be able to help me. Could we jump on a call? Could we do this? And then that's how the whole process works. So I'm running ads. I do like a live cast like this, essentially. I've got a private little group on the internet that I bring these investors to, and then I show up just like this, and then I just serve. I serve that community. And then what happens is there's a certain percentage of them that always raise their hands that say, hey, I'd like to learn more. Okay, so that kind of demystifies like what's happening. If you pull back the curtain, that's it. We keep it super, super simple. And that's the way that the processes have to be to work. But I go out, I put up this $800,000, this request to my investors, and then they say yes or no, depending on their interest level. And then as long as you're bringing in enough people, it's pretty easy right now to fund these. When we put out our 38 unit building, it took us about maybe 3 weeks, and then we were oversubscribed. Literally, we put it out to our investors, and then we had an amazing response, and then we had an oversubscription come in, like meaning we had more people interested in the project than we had room for investors on the project. And it's not because like I'm overly amazing or the deals that we're doing are overly amazing. I mean, the deals that we're doing, they're good. Don't get me wrong. Like we take our time, we underwrite them, we make sure that it's actually a good fit. But at the end of the day, there's a couple of factors that are going on. Number one, it's your ability to communicate to them what is a good opportunity, like showing them, hey, this is a good deal. I underwrote this. And number two, it's the rapport. People want to do business with those that they know, like, and trust. And even like that connection point, it starts through medium like this nowadays, especially since the whole pandemic went through. Nowadays, this is like how people start the connection a lot of times. And then it can grow from here, obviously. And then the third reason that it works really, really good is because there's an abundance of capital. That capital is not going to last forever, though. Like eventually we'll start to grow out of this inflation. Eventually people will place all of their capital. But right now there's an abundance of capital. And it might not feel like it in your personal bank account or with like the group of people that you hang with, but trust me on this, there is so much capital out there right now looking for safe homes, and you can be the person to help provide that. And meanwhile, our candle's burning. Like, I don't know if you can tell, but we burned probably a good inch down on this candle, and it's ticking. This is our life. It's ticking. So right now, I highly encourage you, just run for it. Like, do what you want. When I talked to this gentleman last night that did $100 million in real estate deals in a short window of time, it was a kick in my butt. And it was like, holy cow, I can do so much more. I know that I can do more. And I'm pressing the gas pedal. Like, I'm going. I'm going to make every minute that God gave me on this planet, I want to make it count. When I get to heaven and I'm looking at God and I have to give it a testament for my life, I certainly want to give a positive testament. I certainly want to say, God, this is what I did. This is how I was a good steward of the money and the assets that you gave me, the resources, and here's the people that I was able to help. I want to give that testimony. And I don't know what it is for you that drives you, but just make sure you're going after it. The candle's burning, okay? I'm going to do two things. I'm going to open it up for questions. So if you got questions, you can start to load those over in the chat. I think I will be able to see most of your comments. If you want me to be able to like see your name and whatnot, you got to click that little link that's in the description. That's the software platform that we're using to come live to you. Otherwise, if for some reason I can't take it live, I certainly will. We go back and answer every question that comes into our world. So through these live streams to the best of our ability, at least. Okay. I'm also going to do this. If you want help with this stuff, if you want like a taste, or if you want the whole kit and caboodle of how we can help you, we're opening up something pretty special. It's a secret right now to the world. But I'm going to open it up. I'm going to drop a link in here. I don't know. Let me take questions first. Let me take questions. I'll think about if we're going to drop it tonight or if we're going to hold on to it. What are your questions? What do you want help with in this business? Finding, funding, or closing multifamily deals, or running the ads to make all this stuff happen. You bring it to me. I'll give you the answer. I'll try to help you out and get you moving in the right direction at least. Finding, funding, or running ads to make all this stuff work. You drop it on me, and I'll do my best to help you out with it. Okay, cool. I see getting loaded in. Awesome. I'm going to do this. While you guys are loading it in, I will drop this. And Richard, you just dropped the question. Awesome, cool. I'll answer this and then I'm going to show you, okay? I'll show you the secret that we're about to unveil. It's literally going to rock the real estate world. Absolutely rock it. I know it is. So Richard's saying, how profitable is that deal on a month-to-month basis? So this particular one, $132,000 net on this one, it's so. It'd probably be about a 5% ROI, or cap rate would be a better word to use on this one. And it's so. The thing with commercial, like if you're going to buy a single family rental house, typically you're driving for a bigger rate of return, like 8, 9, 10%. If you can get that, then that's great. But there's some hidden benefits to this whole investing world, this real estate specifically, that a lot of people, they don't know unless they're told. Number one benefit is that when that payment comes in every single month, those rents from tenants, when those payments start coming in, what happens is that you're turning around and you're paying the taxes, you're paying the mortgage on the property, the bank loan, and that bank loan is paying down principal and interest every single month, just like you do on your regular home. If you've got a mortgage in your home, you're paying down principal and interest. And you keep paying that every single month, and that's money from the tenants. And that principal that you're paying down on the loan balance, that's actually like a secret savings account for you. It's a secret savings account every single month. You see, that mortgage payment's fixed. It's not going to go up as long as you take out like a 20-year or a 30-year fixed mortgage. It's not going up. But what are rents going to do? Rents are going to go up. I've been in this business now 15, going on 16 years, and rents have gone up all the time. I know there are some snippets in history where rents may have stalled out for a little bit, but overall, rents have just kept going up and up and up. Okay. And so if you got a fixed rate locked in mortgage for 20 or 30 years, and you've got rents that are going up every single year, you're going to keep paying down that mortgage. That equity that you're creating in the property, that's like your secret savings account. So although we might say it's only a 5% return on investment, really, if you count the amount of principal you're paying down that you get to recapture when you sell the property, or if you refinance, your return goes up a lot exponentially. And then as your rents increase, the value of the property increases. So your real return on investment can be huge, absolutely astonishing. Like the 38 unit building property that we bought in Lexington, on paper, that's only about maybe a 5, somewhere close to 6, if everything's tuned up the way it's supposed to be, a 6% return. But the value of that property for us is that it's under rented right now. We're increasing the rents on it. So that's our value add upside on this thing. And then when we're done with that, 18 to 36 months from now, that property's value is going to go up between $500,000 and $800,000 in value. And then if we decide to sell that property, our investors will hit a return somewhere between 17, maybe even 21%, as long as the economy is good and all that kind of stuff. There's world factors to all this stuff, but the value goes up tremendously. So the return on investment is much more than what you see as the cap rates. That was a really good question. I hope I answered that question for you. Okay. Corey saying fundraise conversation. Yeah, happy to. If you got a question on it, fire it away. I'm happy to talk anything that I can on it. Cool. Next one. This is Dorian from Minneapolis. Awesome, Dorian. Nice to have you. Minneapolis is where I got my start in this business. My parents are up in northern Minnesota, Duluth, and so when I graduated from college, I ended up in Minneapolis working for Target, and that's where I started all of my real estate deals. Good old St. Paul, actually. St. Paul and Minneapolis, back and forth. But you need help funding deals. I see a lot of opportunity out there. I just want to hit it the right way. Yeah, what I'd encourage you to do, I'm going to drop, and like literally I'm unveiling this tonight, okay? I don't know, I was kind of hesitant on it, but I'm going to unveil this. We have a very simplified version of one of the most robust programs that we've been creating in a long time. Like, this is really, really cool. It's called Investor Engine, okay? And we're offering a monthly plan for this thing for people to come in and just rock it with this. I would encourage you, if you want help with this advertising stuff to start driving in leads for you, I'd encourage you to check it out. I'm going to drop the link for it and you can check it out and all that kind of stuff. If you want someone to like actually build ads for you, our team could help with that potentially. You just want to book a call with us. Just drop in the comments below that you'd like to do a call. Just say, hey, I'd like to do a call. And then somebody on our team will reach out to you. We'll get in contact, and then we can jam about it and see if we can help you or not. At a very minimum, we could probably give you a good game plan, and you could either take it and execute it on your own, or you can come back to us when you're ready for it. Good question. Okay, next one. Who are you targeting on your ads? Tired landlords. So right now, the biggest kind of group that we're going after, like tired landlords is a good one. You certainly can go after that one. But I've hit a couple of different niches. I had a chance to run ads for Ron LeGrand, really good dude, amazing real estate investor. If you get a chance at some point, he's a mentor of mine. If you get a chance, make sure you go see him. But one of the ads that he challenged me to do right there, like literally I was at a live event, 3-day event. And on day one, he's like, hey, you're good at this Facebook stuff, right? Well, I want to see it live in action right now. And we're in front of a room full of people. And he put the pressure on, okay? And the ad that he threw at me, I had never run in my life before. And it essentially capitalized on people that want to get, they think that they have a pretty house, because that's like what Ron does is pretty houses. They think they have a pretty house and they want to get what in their mind is market value. And so he gave me this ad and I'm like, okay, let me see how it will do. And I put that ad out there and I got tons and tons of people. By the third day at that event, it impressed everybody in the room. We had a whole bunch of people that are like, oh, I want that. And a whole bunch of people signed up for what we do here at Social Media Blueprint. So it's pretty cool and all that kind of stuff. But I prefer ads like that take that angle. Like tired landlords are good, and we've got ads for that and templates that work really well. But I like to go after little niches. And it starts with the niche that you best serve. So if you serve tired landlords really well, yeah, let's lean in, let's go all in on it. I'd rather that you serve a certain niche, okay? We have one client right now, her name is Tammy, awesome woman. She's taking off. She's like carving out her own little niche in the world. She had someone in her family that ended up having to go into senior living, senior care. And she had to deal with the real estate. And so she learned like all the steps and all the processes that had to happen to make, and this is a big deal because when a loved one is going into senior living or a nursing home, like someone's got to pay for the nursing home. And a lot of times if it's a state-ran nursing home, they want the asset, they want the house. And so it gets complicated. And Tammy figured out all the steps behind it. And now she is like literally leaned into that. She has a book on it. She, all of her marketing talks about it. Like instead of calling people that are hoarders, that's what you and I might say with all the stuff, she calls them aggressive collectors. She's got like names for everything, and she leaned into this niche, and now that niche is serving her. She's pulling deals because of that. And that's what I would prefer that you do. If I were going to like coach or mentor you, that's what I would say is lean into a niche. Who are you the best in the world at serving? Me, I'm pretty good at tired landlords. I have been a tired landlord myself before. I'm a landlord now. I love working with that community. So like I have no problem running those ads and all that kind of stuff. But most important is you want to serve a niche. When you're the best in the world at that, nobody can compete. Okay. So it's a great question. Hope that helps. Hope that helps with the answer. Okay. Pete is saying, hey, Peter, how you doing, man? Nice to have you. What's the best marketing options for getting buyers? Literally this right here. Okay. I'm just going to share it right here. We'll do a quick unveil. I'll post it in the comments. Go to the webpage, smbinvestorengine.com. smbinvestorengine.com. Okay. Literally, like you guys are the first in the world to ever see this. Okay. I have two different groups. I've got another group that I've been taken through and I'm working with really, really closely on figuring out like what works, what doesn't work. And I'm perfecting the process with them. And I'm spending a lot of time with them, like understanding where bottlenecks are. And we're taking the feedback from that. And we've developed another product called Investor Engine, where people can get in on a monthly basis with us, literally month to month. They can cancel anytime. So like if you come in and you're like, holy cow, I love this stuff. You come in for a month you can leave. If you come in and you're like, gosh, I love this, I want to keep going, then you can stay in. So we've designed it literally. This is going to be the thing that I believe will serve the real estate investor community the most by far. We also wrapped around a tool with this called REI software. That REI software tool is one of the best on the market if you're looking for like a tool to help you with text messages and all that kind of stuff. I can't find a better one out there. Literally, the owner of REI software allowed me to come in and help collaborate and write the emails, write the text messages. I had my copywriter working on them for months. And that platform right now is insane. And that's part of this package. So this smbinvestorengine.com, I would check that out. Okay. I literally couldn't refer you to a better spot than that right there. Okay, Dave. Hey, Dave. Nice to have you, man. Dave, you're a celebrity. You know that? You see, because every time that someone that we work with, one of our clients gets a win, we celebrate it in the office, Dave. And so when your name comes through and when you're taking these deals down and creating equity inside of your IRA, like we get so excited for you. So I want you to know that you're a blessing. Literally, like we thank God for having people like yourself in our world, and it gives us a chance to serve and do what we're supposed to do. So we appreciate you, Dave, and I appreciate you being on too. What are some ways, Dave is saying, what are some sample ways to find multifamily properties that might potentially be for sale? So the easiest way, Dave, is literally go back to like Social Media Blueprint 101 and start marketing towards the seller. So the ad can't be an image of a single family house. It's got to be a multifamily property, and it's got to say something to the tune of, I buy multifamily properties. You could try variations, but you could try full price. You could try things like, I buy multifamily properties in XYZ situation. A niche is going to serve you the most, but like, that's it. That's kind of the whole thing. You want to go after it based on the niche. And if you want to jam more on that, like submit that either as a ticket or just let us know internally. And I'm happy to. Like, I think I've got some screenshots I can send you, Dave, on my multifamily campaign that will probably advance you along a lot faster rather than trying to do it all trial and error. So yeah. And if you need funding, I think you're pretty good at that already. But if you need funding, the funding side of it, we've got campaigns for that too. Cool. Next one. Let's see. What does the program cost? This what I just unveiled, Investor Engine, SMB Investor Engine, it's $500, $500 a month. Best darn investments. And I'm not saying that like to get a bunch of sales on it or anything like that. Literally, like, God has blessed us. We don't need to have money for this stuff. We're doing it for much different reasons. What happens with a lot of people that we work with, this is down the road, but what happens with a lot of people that we work with is we end up doing real estate deals. Our real estate business is dominating right now. God has put some some major blessings in my life, some really good people, and like we're doing well with it. So what we do on the social media blueprint side, it's not like this giant profit center for us. We make a small margin on what we do here, but we make big impact on people's lives. And then we create these partnerships that foster into something that's quite amazing. So it's $500. It's the best darn deal out there in the real estate community. And we designed it that way intentionally. Okay, cool. Next one, how would you raise rents when there's a 3% increase limit in Florida? Yeah, so rent caps are becoming a real thing in a lot of areas. I haven't heard about one coming across the board as flat in the state of Florida. I've heard about proposals. I've heard proposals for cities and different areas. St. Paul, as an example, St. Paul in Minneapolis, they actually passed a rent cap for landlords. You can't raise the rent a whole bunch and all that kind of stuff unless they fall into these little niche criteria. I'll just say this, every time that the government has done that in history, I understand why they do it. I get it. They're trying to keep things affordable. They're trying to lock in prices for the tenant folks that need these properties. I understand the cause for it. The thing is that, as you know, anytime the government gets involved in anything in the private sector, if they do too much of it, what happens is they tend to be created. And the last time, this used to happen a lot in New York. New York was like the first that I know of in the country to start doing these rent control measures. And then what happens is that landlords, if they can't increase the rent, even though their taxes are going up, their insurance costs are going up, their maintenance costs are going up every year because of inflation, if they can't increase the rents, then what happens is that landlords just say, well, you know what? I'm going to stop improving the property. Why would I keep sinking money into the property if I'm not able to collect more rent? It's more lucrative for me to go build new construction that I can set the rent at a new bar, a new high, because there's no prior rent that I'm increasing from. I'll just go build it. So then all of a sudden, all the investors that were in existing multifamily and single family properties in the rental game, they start to shift over to new construction. And then all the old housing gets left old. No one's updating it at all. And so what happens, it's like a teeter-totter. So when New York finally realized, like, oh goodness, these rent control measures are causing everyone to flood over to new construction and no one is maintaining the existing housing stock, then they backed off. And they said, you know what, we're going to amend that rule. We're going to take it back a little bit. And it's my best guess is history will repeat itself. Minneapolis, St. Paul, they just passed legislation that they're going to have rent control. My guess is that they'll do that for a decade, and then they'll realize that it was really stupid to do that. They shouldn't mess with the free market, and then they're going to have to back off. That's my guess. But how do you do it in the time being? You don't. I mean, if it becomes law, it's law. You try to prevent laws from going through. Like if you hear proposals and whatnot, stand up, say something, call your local legislator, call people that can make a difference on it. Try not to let that kind of stuff go through. That's my best advice. But if it does go through, you just live with it. You can do what everybody did in New York. You can shift over to new construction. That's what people will inevitably do if they get ransacked by the government. They're not gonna improve the property. Just not going to happen. There's no incentive to do it, and you're getting beat up by increased taxes. There's just no way. So, great point. Great question you bring up. Next one from Sean: how much do you share with the investor when the cap rate's about 20%? So, if regardless of what the cap rate is, this is a good question, Sean. Regardless of what the cap rate is, I'm usually sharing. It depends on how much work I have to do in the deal. Like if I'm getting into a heavy renovation project, that's a lot of time. That's the hardest part of this whole business. Like finding a deal, yeah, that's time. I got to hustle. I run some ads. Finding investors, yeah, that takes time. I got to hustle. I got to run some ads. But managing a rehab, that's another level. Okay. This is coming from someone that's rehabbed hundreds of properties. Like I wouldn't sign you up for rehabbing a bunch of properties. Light renovations, okay, but major rehabs, that's like, so I want more of the pie. If I'm going to do a heavy renovation, like when I bought this 20-unit apartment building a decade ago, it was a heavy renovation. We had to literally take it down to the studs. We had to put in like fire-rated sheetrock. We had to put in this special caulk. It was really stupid, but I shouldn't say that. It was really silly because it was not code to use this fire-rated caulk but the inspector made us do it in this property. He was holding us to new construction standards on an old building, mainly because he could. And he lost a debate with me. We got into a debate on one thing, and I'm like, hey, I checked the rules. Like, I don't have to do that. And so then he went and talked to his boss, and then he came out and came up with this whole thing on fire-rated caulk. Anyways, I digress. I don't want you to get into a bunch of rehabs, but if you are going to get into rehabs, I want at least 50%. I want 50% of the pie. If it's a really easy project and I can like sit back and just collect rent, let the property manager collect rent, I might lower my share of the pie and increase the investor's share of the pie to like an 80-20. Let the investors have the majority of it because they're putting in the equity in the project. So it depends on the project is the real answer. And I think if you talk to enough people that do stuff like this, they'll tell you the same answer. It really depends on the level of involvement. At the end of the day, you want to put something on the table that investors are going to be excited about. So when I go to my accredited investors and show them this stuff, I want them to be excited. I want them to win. Like if they're winning, you're winning. If you're winning, you're gonna be able to get more properties. They're gonna refer friends to you. They're gonna want to do more deals with you. So you want to give them a good chunk of the pie that they're gonna be happy with. I know how to approach. Hey, Corey, how you doing, man? Nice to have you. Corey says, I know how to approach. I'm going to take this down here so that I can see you guys better. Oh, I hope I didn't lose it. Here we go. All right, there we go. I know guys with money. How do I approach them about this conversation? Corey, I would package up a property the right way. We put them into a brochure format or a web page format with all the data. Like I just sketched for you guys right here. Like I can do this on the back of a paper napkin. I can go to Starbucks with an investor and like sketch this stuff out, and I can probably get a commitment from some investors. But most investors, they want to see a professionally done thing. They want it to be packaged the right way. So then when they get home, they can show it to their wife. When they get to work the next day, they can show it to one of their colleagues and say, hey, look at this project I'm getting involved in. They want to feel proud of what they're doing. So like if I just let them leave the Starbucks meeting with this, scratch piece of paper or the back of a napkin, it wouldn't leave that impression. It wouldn't leave the professional touch. So I package them the right way, and then I let them take them. So if it's a Zoom meeting or a web-based thing like this, I'm going to have it on a web page, nice and laid out. By the way, like we can help you with all of that. Like that's the kind of the fundamental thing that Social Media Blueprint's doing, marketing and then positioning you for investors. So you can use that same link if you want to like use the software that I use. Literally, you can use that same link and you'll be able to get it. So that's smbinvestorengine.com, smbinvestorengine.com. Cool, good question. Next one, can you use this model for different commercial asset class? Oh yeah, absolutely. I've done it with car washes. That's a wild business right there, car washes. It's mostly cash. So your guys and gals that are collecting the cash, you gotta be really careful in that frontier. But yeah, I've done it with car washes. I did it with multifamily, did it with mixed use. You can certainly do this with other asset classes too. Most of the people that are buying the bigger commercial deals, I shouldn't say the bigger, because the bigger, like when we're talking about sky rises and like 80 unit apartment, like those kind of properties, they're usually sold to private equity firms, pension funds, insurance companies. The big stuff, that's who those properties are usually going to. But the medium stuff, like multifamily, less than 100 units, local strip mall that's got 6 tenants in it, that kind of stuff is sold to people like you and I that do syndications. That's what this word's called, syndication, where we package it up. We have an attorney write all the documents so it's professional, and then we have investors come in on the deal. That's a syndication. And so, yeah, you can certainly do it. This works for any asset class in real estate that I've ever come across. Great question. Okay. Craig says, welcome to Lexington. Thank you, Craig. I love it. You must know that area. I love it so far, so good. Great place. It's funny. I live in Florida, and 2 of my neighbors are from Lexington, Kentucky. One of them used to be in the horse racing business and all that kind of stuff. So it's really cool. I get to talk to him about it now, and I've got something in common with him. So it's pretty cool. So thanks for the welcome. Next question is, how much should we account for running ads? Does it depend on the property that we're selling? So it's really a tricky question to answer. I would answer it like this. I'll ask this question of you. How much would it cost to drive your car from New York to, well, come visit me, come to Sarasota, Florida. How much would it cost to drive your car from New York to Sarasota? And this is a difficult question to answer because gas prices are surging. We don't know what kind of car we're talking about. Who's driving? Are they going fast? Are they going slow? There's all these variables. And running ads is very similar. I don't know how fast you're going. I don't know how good you are at converting leads. That's probably the most important one. Like someone that comes into my world that doesn't know how to handle digital leads, you might have to have 10 conversations with someone to make a conversion happen, to get a deal. Whereas someone that's really experienced, they might only have to have 1 or 2 or 3 conversations and they might get a conversion. So the person that only needs 1, 2, or 3 leads to get a conversion, to get someone to say yes, they need much less ad spend. So the ad spend question is really relevant to experience. I know that I got people in my world right now that they can spend a few $100s to get a seller. I've also got people in my world right now that they might have to spend $1,500 to get a seller. And then on the other side, bringing in investors like this, some people can spend under $500 and they can fund their deal. Other people might have to spend $1,500, $2,000 to fund their deal. But even if I had to spend, let's just go ridiculous, which this doesn't happen to me. Let's just say I had to spend $10,000 to fund, and that's never happened to me before. But let's just say I had to spend $10,000 to bring in investors to do a $3 million deal like I just mapped out on kind of the back of a paper napkin kind of a sketch, this little sketch right here. If I had to spend $10,000 to put this thing together, this deal can absorb it. It's worth it. Like all day long, it'd be a good investment of the $10,000 to bring in the investors that could fund this project. So that's a really good question. It's going to depend on basically how good you are. And then number 2, like what you're going after. Do you need a lot of money, a little bit of money? Do you need a lot of sellers, a little bit of sellers? Cool. Good question. This is that link too, by the way. I posted that in the chat in case it didn't come through. I think over on YouTube, it doesn't always come through. So it's smbinvestorengine.com, smbinvestorengine.com. Dave says he's working on a solo 401k investing right now. Too kind of you. Enjoy learning. Dave, you're a blessing, man. You're a blessing. I can't wait till we get together the next time. I hope you're coming to Nashville. I'd love to see you, man. If you can come, if you can swing that. I know you're a busy guy, but I'd love to have you there at our events. Next one, can you run comps with the software? So this particular software does not run comps. Sorry. I wish it could do everything, but doesn't do comps. Nope. Peggy. Hey, Peggy, how you been? It's been a while. It's been like a couple years since we last connected. How's Neil doing? I'd love to reconnect again. So Peggy's asking, if you hold the property, what is the annual return to investors? What's the annual return to investors? So if you measure, like, let's just take this property as an example, because we were doing this. This is that 820 Albee in Nokomis. So this particular property, it probably makes somewhere around a 5% return, like if we just collected rents. Okay. Where these things get really interesting though, is when we resell them. So we could hold it for 2 years, 3 years, something like that, and then turn around and resell it and then make a monster profit. Because remember, this one's worth 3.5. We're into it for 2.8. We make, at least $500,000 on a property like this. That's where stuff gets interesting. And then the return on investment goes up dramatically. That's where we start to hit those 15, 20, 25% returns that you see people doing on commercial real estate. It's not the month-to-month rent. It's just not there for that, but it is over here when you sell. Or a smarter strategy, rather than selling this property, we refinance it. So we go back to a bank and we say, hey, bank, it's now worth this. I know we got a loan on it for this 2.8, but it's now worth this amount. It's rented. Everything's totally stabilized. I'd love for you to give me a new loan based on this. And then if you bring in enough money on the refinance to pay off all of the loans in the original investment, this 560, or I think we said we're going to do 800 on this one. If we bring in enough money to give back the money to investors, this $800,000, now the return on investment for those investors becomes infinite, truly becomes infinite, because they don't have any more money in the deal, yet they still own a percentage of the deal. And now the returns, it's hard to calculate. It becomes theory at that point because they're making an infinite return on investment. So that's a great question. Great question. Thanks, Peggy. Next question, Ms. Walker, is this session going to be recorded? We're streaming right now on YouTube and Facebook, so it'll live there for a while. Usually we leave them up for like a week or so. Sometimes YouTube stays there longer, so it's there. It's there for you. So please come back. If we can help in any other way, let us know. Charlene says, I want to find property, investor, multifamily units, and sell to build wealth and serve in a public charity. Awesome, Charlene. I appreciate that. I appreciate you. It's funny, when I was talking with the gentleman last night that I mentioned who showed me this candle that's burning, he reminded me of that. Like his purpose, like he did $100 million in real estate deals in a really short window of time, but that's not why he booked the call to jump on and talk with us. The reason he booked the call to jump on and talk with us is he said, hey, my candle is burning thin really fast. I'm very motivated to make an impact in the world. He said, the next phase of my life, I want to touch people. I want to really help them. I want to teach them the path that I've walked down so that they don't have to go out there and trip and do the wrong thing. I want to help them with that. Can you help me help them? And so that's why he booked the call. And so this charity aspect that you're talking about right here, Charlene, that will motivate you more to do bigger things in this business than just you making money. The just making money part, that can be great for a little bit, but it's short term. When you're making a bigger impact on the world, it just becomes so much. Like there was a point in my career where I did a really bad real estate deal. This is earlier in my career. I did a really bad real estate deal. It was a big development project I never should have did. And I had partners that walked on it, and I was the man standing. I had signed the bank loan, and I had to deal with it. And I had to liquidate a ton of rental properties. I had to do everything I possibly could, and I was brought to my knees, figuratively and literally, at that point. And I remember my bookkeeper asking me the question. She said, hey, you've got this charity over here that we've been giving money to. Do you want to stop that? And I thought about it. I prayed about it. And the answer came back to me crystal clear: no way. No way. The people that get that money, they're doing kingdom work. They're doing God's work. They're doing things that they count on that. There is no way that we're cutting that. And so we didn't cut that. And I believe that blessing came back to us, because what happened is then I said, okay, backs against the wall. We are going to bust tail. We're going to work hard. We're going to push this thing. We are going to make this happen. And thank God we've been able to make a lot of stuff happen. We were not only able to recover from that situation, but we're now blessing more charities than I ever thought that we would. We get to be that beacon. And I say that not to like say, hey, look at us. I say it for you. Know what motivation you should grab onto. Know why you're running hard. Don't just run hard all by itself because you'll burn out. Run hard because you know you've got something bigger than you. That'll push you. Whether it's your kids, your grandkids, whether it's leaving something behind, some kind of legacy for your family, whether it's to make an impact on the world or to support a charity. All of us have that thing, and I just encourage you to run after it. Like know that with crystal clarity. We talk about that a lot when I get to work with people in a close relationship. I talk about that a lot because I know it's the number one thing that's going to make someone succeed or not succeed. It's not the real estate tactics all by themselves, because the real estate tactics, like I'm teaching you, I hope good stuff. I hope it's been a ton of value for you so far tonight. But at the end of the day, it's a basic real estate tactic. These have been done for hundreds of years. Now they're getting done in a different format. They're getting done online, which is where we kind of serve the niche and help people to figure out that space. But at the end of the day, these are real estate tactics that have been done for a long time. But where I know it's going to be make or break for most people is just having the right direction, having the right push, having the right pull to get you where you want to go. Can you use this for short-term rentals? Absolutely. Great question, Ice. All the time. I'm sizing up a couple right now in Greenville, South Carolina, that I'll do the same exact strategy on. Okay, we call it our SLP. Okay, our SLP, because this is very different than BRRRR, where you have to fund a project and then you refinance in the back end and you have to burn your own cash. We do this with SLP. We get paid a fee up front, and then we carry the project long-term. Okay, I didn't talk a lot about that, but we can at another time. We actually, when we're doing these deals right here, I should have actually drawn this for you. when we're doing this deal right here, typically we're going to add something in here right now called a management fee. Management fee. I should have drawn that, and I'm sorry I didn't. These vary from project to project, but on a bigger project like this, it might be $100,000. On a smaller project like a single family house, it might be $10,000. I started doing these 12, maybe 13 years ago on single family houses like this. And I did with one particular investor. Like I did it with a lot of investors, but with one, he paid me at that time $5,000 as a management fee on every single project. And then later on, we increased it to a bigger fee. And I did it for other people for $10,000. But anyways, so imagine instead of just like, a lot of people do the wholesale business. Instead of just wholesaling the property, if you can put money in your pocket up front, and make cash flow on the back end, that's what this cash flow is over here. If you can get paid up front and you can make cash flow on the back end, then this becomes literally, we joke sometimes and we call SLP set for life, the set for life process, because it sets you up really well. You make money up front and you make money on the back end. Okay, so that's a really great question. Yes, it does work for short-term rentals. New to real estate, what are the challenges, Esther? Let me tell you a story, okay? Esther, this is the biggest challenge. This is the biggest challenge, and most people suffer. Most people quit on account of this challenge, okay? Remember this whole time, this candle's burning. Life is going to go. Doesn't matter what we're doing. But to get from point A to point B, let's just say point B for you is, retirement or financial freedom or having $25,000 per month coming in, whatever that is. I'll just write over here because I don't know your exact goal. $25K per month coming in. Okay. To get from point A to point B, what most people do in life is they do this. They get a little bit distracted. They see this cool shiny object over here. They get zigzag. They get set back a little bit because something happens. And then they get back on track. And most of them just do circles and they never make it. That's the reality of life. Think about it. Anyone you've ever heard that says, hey, I'm going to do something. Most people, they just never make it. The world shuts them down. They get told no too much and they just quit. That's the biggest challenge in real estate right there. But let's just say that you're different. You fight through it, or you eventually get to point B. Those of us that are really determined, we will get to point B. We absolutely will. Okay. But the question is, how much time did it take? How much time? The best way to go about real estate investing is to have someone show you the shortcut from A to B like this. I didn't learn this right away. My first 11 months in this business, I was this guy, zigzagging, trying to figure it out on my own. Oh, I'm smart. I'm going to figure it out on my own. And then I had a setback. I almost quit. And then eventually on my 11th month, right here, my 11th month, I went and hired a real estate coach. And I know that sometimes when we hear the word coach, it gives a bad rap and people are like, oh, I don't want to do that. Well, why does Tom Brady, I know he just retired, but good example, but why did Tom Brady have 4 different coaches? He's got the head coach of the team. He's got the quarterback's coach. He's got the offensive coach. And then why did he also hire a private quarterback's coach just to help mentor him? Why would he do that? We're talking about someone that's won more Super Bowl championships than anybody else that I know of on the planet. Or why did Michael Jordan, when he played in the NBA, why did he have so many coaches? The thing is, like, sometimes us as entrepreneurs, we just, we're smart people, and we say, you know what, I don't need anybody to help me. But then we end up just doing these zigzags and we get lost. This is the biggest challenge right here. If you instead just find someone to show you the shortcut, the short path from A to B, this will eliminate most of those challenges, and it will save a heck of a lot of your life by finding that person. And I'm saying this, it's not like, oh, conveniently, hey, we've got this investor engine product. You should, no, not at all. Like I literally, I'm not attached to that at all. If we can serve and we can help you, awesome, cool. If not, that's totally cool too. Maybe sometime 20 years from now, maybe we'll do a real estate deal together. Who knows? You never know how life works out. But what I am saying, even if it's not here, is just find someone that can help you go from the path from A to B the fastest. Don't try to do this on your own. Don't try to reinvent the wheel. Don't try to just figure stuff out. When you figure stuff out, you eventually can do it, but you're usually costing yourself so much more money. And at a very minimum, it's going to cost you the thing that's the most valuable on earth, and that's your time. Time we can never get back. This candle is going to burn out while we're together. Okay? Corey says, very cool, great ideas, and thank you, Nate. Awesome. Thank you, Corey. Pleasure having you. Charlene says, when investing monthly for $500, how can I fit in on a multifamily deals and make money each month? Charlene, I don't fully understand your question, but I'm going to try to answer it. Okay. And if you've got more context, just go ahead and you can drop it in the chat here. But when you invest monthly, are you talking about like the investor engine that I just dropped, the smbinvestorengine.com? Or are you talking about investing into a project at $500 per month? If you're looking to be a passive investor into a real estate project, usually those projects, they require, especially multifamily, they require a bigger chunk of cash from investors, like $100,000 roughly. All of them vary though. You can get into smaller deals. Some people have syndications where you can get in for as little as $100. They're totally different type of syndications that they do. Instead of going with a 506c3, they go with a B. Technical legal jargon, don't worry about it, but they're going with a different offering altogether. So it just depends. So I hope I'm clarifying so I can understand your question. And then the second part of it is, how do you make money on multifamily deals? You get in. You either become the syndicator, the person that puts them all together, just like I showed you tonight, or you become a passive investor and you invest into those things. So if you can get on the syndication side yourself, you should. Like, it's a beautiful side. Just if you've got time and you've got the drive to like take on, stabilizing an asset or taking over a existing cash flowing property. If you can, I would get on that side if you could. Next one from Rich. Hey, Rich, how you doing? Rich says, how do you reach these bankers that have commercial properties that are upside down? So a few different ways. You can do what I did, and I called bankruptcy attorneys. And I just call and I build a relationship. They're really secretive. They don't want to give you anything because they're representing their client, keep in mind. But if you build enough of a relationship, then they'll, like the one that I just mentioned that I spoke with, they sent me 3 properties. They said, hey, I can't give you any details because it's confidential, but here's the 3 properties. How much can you offer? I was like, okay, cool. That's awesome. So that's a really easy way that you can do that. Next one from Charlene. Oh, yes, Nate, you're such an inspiration. Thank you. I appreciate it. You're so on point. God's continued blessing you and your family. Thank you for sharing with us and advancing God's kingdom. Thank you, Charlene. Really, really humbled by that. I appreciate that. More than you know. More than you know. Sometimes we have tough days too, and so I love hearing that. I do. It's not about you or I. We all know what this is for. We know what we're supposed to be doing. Okay, next one. Will this new program work for distressed houses? Yeah, that's kind of where I started. I started with only distressed houses. And so yes, it will. The reason I'm asking is because I was looking at another one of your programs for wholesaling. I'm just getting started. So what would you recommend for wholesaling since I'm on a small budget? If you're budget sensitive, then I would go with this smbinvestorengine.com. If you're able to do our other program where we build stuff for you, it's faster because we actually set it all up for you. And then you get in the car and you just drive. But if budget's tight, then you join Investor Engine like this, how it's set up like this monthly, and you do it. We'll show you, and then you do it. And then you show up, you ask questions. If you get stuck, we go through it. And so, yeah, that's the main difference between the two. So I hope that answers your question. If you're budget sensitive though, but you've got the drive to implement what we show you, then this would probably be a good choice for you. Next one, do you know of any deal where I can put in $100K and make a minimum of $3,000 per month? Not right offhand. And I would have to ask the question too, like, are you an accredited investor? If you're accredited, it opens up the playing field. There's so many opportunities that are out there. If you, let's do the math on this together, okay? $3,000 times 12 is 36,000 per year. So that's a 36% return on investment. I don't know many deals that can do that safely. Like I'm talking like without taking a ton of risk, safely on just the cash flow. However, if you're willing to accept part of the money as cash flow and then part of the money when the property sells or when the property is refinanced, a lot of properties can hit that 25 to 40% range. A lot of them. The gentleman that I was speaking with last night in his $100 million, like for him and his investors, what he's done in the last couple of years, he had one property where he told me that they hit a 78% return. So that's double what you're talking about. So yeah, they're out there. If you're accredited, it opens up the window a lot. Okay. Not accredited right now. No stress. I just saw that come through. No stress. Work hard on what I just taught tonight. Get some more cash, become accredited. That's one way to do it. Alternately, you look for a fund or a syndication that doesn't require the accredited status. Pretty simple. They're out there. I don't know. I don't have one right off the top of my head. If I did, I'd tell you, but I don't have one off the top of my head that is going to hit the numbers that you just mentioned. That's a pretty good deal. Just if you find one like that, just really underwrite it. Make sure it's a really safe deal. I wouldn't want you to take unneeded risk or anything like that. Okay. Question is, can we see it in action or try a demo? I don't have a demo for you. That's a really good piece of feedback though. I thank you for that. To that point, I'll probably do some kind of video on that page. Literally, like you guys are the first people in the world that are seeing this. My team worked really hard on it. We're trying to come up with something that it helps people that are like, if the budget is tight, or if someone's like, do I really trust these people? Do I really want to do this? And we tried to come up with a product that can really serve that, just help people jump in. Because I know what happens. For us, it's not about collecting cash up front from people. Although like in every business, having cash is good, right? But it's not about that for us. Where we actually like make the majority of our revenue comes from is our real estate deals. So if we can help get you to a point where you're doing real estate deals and you bring deals to us at some point, that would be awesome. That's win-win all the way around. So yeah. So, but I will think more about that. That's a great piece of feedback. Maybe I can get some kind of demo video on there eventually, but I don't have it right now. Hal's asking, how can you become accredited? Hal, nice to see you, man. Got to see you earlier today, twice. Yes. How do you become accredited? There's no like formal process or application. The SEC, Securities and Exchange Commission, defines an accredited investor as someone that makes $300,000 or more per year as a household income, or if you're solo, which I know you're not, but if you're solo, then it would be $200,000 per year or more. And you got to do it for at least 2 years in a row. And then the other criteria, if that's not the bucket that fits, the other bucket is $1 million in net worth or more, excluding primary residence. So like stocks, bonds, 401ks, all that kind of stuff. That's like the SEC definition. Once you're like there, so to speak, then typically what these syndicators will do, people that are putting together offerings like this, is they'll say, well, hey, if you're there, you got to sign this piece of paper acknowledging that you're there. And then we'd also like your attorney or your CPA to sign it. Your attorney or your CPA to sign it. Okay. And then that, like, it's not like a formal process or anything other than a couple of signatures, but that usually suffices most attorneys' requests when they're putting together these offerings like that. So great question. And you'll want to know that too, Hal. If you put together a deal like this to bring in your investors, your attorney should help you with all of this. Like, I am not an attorney. I'm not giving legal advice or tax advice. I'm giving like friendly real estate advice. And I'm telling you like what my attorneys told me. And I'm highly recommending that everybody, if you get into any of these kind of deals, or if you put together these deals, just have an attorney help you. It's worth paying them at least for a half hour of their wisdom, because they know you and your situation. They know your state laws, all that kind of stuff. I would never want to point you down the wrong path. Great question. Next one, Ms. Walker says, is this only for REI ads, or is this the total package, so to speak? It's the total package, but I want to be careful with those words, because if someone said, well, hey, is it going to run comps? It doesn't run comps. Yeah, but if you go to that page, smbinvestorengine.com, it explains what it does and what it doesn't do. It's got everything on there. And I'm doing a really soft launch, so to speak, on this, because it's literally like we're just getting this out into the marketplace. This is like, I know what's going to happen with it. I know it's going to be probably number one product within 4 or 5 months, but we're just gently getting it out there right now. You guys are the first people to see this. So, but check that out. Next one is, do we find deals first, then approach investors, or vice versa? So in a perfect world, Ms. Walker, you want to have investors already like chomping at the bit, ready for projects. That's a perfect world. Because then what it does is it gives you the mental confidence to approach sellers and say, yeah, I can do that. Yesterday, when I was at my property, it's not my property yet. Let's see how this goes. But when I was at this property, I felt very, very comfortable and confident talking with the selling side, because I already know, like I can get the capital together for this without a problem at all. I know that. So I feel very confident in that. And it took me some time to get there. When I first started and I was floundering around trying to do it my way, this crooked path, zigzagging, I didn't have that kind of confidence. I just didn't, because I was trying to do it my way. I was trying to like figure it all out on my own. But then once I hit the 11th month mark and I had someone showing me exactly how to do it, then it was like, okay, boom, confidence. And so that's why I draw this illustration for everyone. Like, if you've got the confidence to go approach investors right now, awesome, great. If you've got confidence to go approach sellers right now, awesome, great. You should do both. Literally should. You should have money lined up for deals before you even have the deal. That's the perfect world. That's a really good question. It's like, what comes first, the chicken or the egg? I like to have money lined up. Okay. Now, no investor in their right mind is going to commit a bunch of money before you show them the deal that they're going to invest into. Sometimes there's an exception, like if you go to like a private equity fund or something like that, which most people aren't going to do. But if you did, like, sometimes you can put a theory-based thing in front of them and say, hey, this is the theory. This is what I'm planning to go after. Would you, kick in your money? But most investors, they want to see the thing. They want to see the address. They want to pull it up on Google Earth and satellite and walk around and all that kind of stuff. That's most investors. So having a property and showing it to them, that's going to be the thing that's going to make it happen the fastest. Okay, I think I have knocked out all of the questions. So I'm dropping the link one more time. If like you're thinking about this, I highly recommend it. Just do it. There's some kind of money back guarantee on that page too. So like if you get into it and it's not your fit, no big deal. Like I don't want or need your cash. And I say that with all the love in the world. This is for a much bigger purpose. Like if you come into our world and we get to serve you and do good by you, I already know what will happen. At some point down the road, we'll probably do something more fun together and bigger together. So, but you can take advantage of that, test it out. I think it's going to be the best product that's out there by far. I have to get going. I have to go pack up because my family and we're going down to look at a boutique hotel tomorrow. It's really cool. I got a huge surprise planned for my wife. She doesn't even know what's happening. But the particular seller of this hotel, he's in his 80s right now. He built this boutique hotel right next to his other business. I can't tell you what the other business is yet because that would ruin the surprise that I'm going to be doing with my wife tomorrow. She doesn't know yet. And my little son, my 8-year-old son, he's dying to know because I told everyone, hey, it's a huge surprise. Wait till you see this. And so like everyone's super excited and he keeps coming to me all day long and he's like, hey, what is it? Tell me, just whisper it in my ear. And I'm like, I can't tell you. No way, because you'll leak it to mom. And I'm not, no. So that's what I'm doing. So the next 3 days, I'll be meeting with the seller, really sitting down, going through numbers. I've already gone through all the financials, but I get to sit down with him tomorrow face-to-face, build some more rapport and see if I can help him in his position. I know he wants to retire and kind of move to the next thing. And then meanwhile, we might be able to pick up a really, really unique property, really, really beautiful, beautiful property. So please wish me luck. I wish you luck as well. Blessings to you and your family. Thank you so much for spending time with me. And God bless. We'll see you next week. All right. Bye-bye.